if we're in like this refinance boom with these historically low rates, how do we set up the second transaction with these already lower rates?
I'm happy that you asked that question, right? Is because our next line of sale is going to be cash out.
Okay.
Because the values of the properties have been so through the roof. And so consumers are going to rely on that. Whether you're in a good position or bad position, credit card debt has gone up. And so you're going to be able to leverage that. So expect that, right? Okay. But the goal right up front is to show them how to build their FICO, build their assets, build their equity, right? Yeah. And in 6 months to 12 months, I'm going to show you how to pay this loan off in 7 years sooner or 10 years sooner. Does that make sense? It's the idea. It's the plan. You get it? So then you combine that with their age and you tell them, can you imagine having this property paid off by the time you're 52?
Like tailored to them.
Yeah. Can you imagine that? Yeah. Tony got the plan. You see what I mean?
Remember me.
That's what's going to keep them glued to you, okay? So if you can keep that in mind, what's going to happen is what's called compound interest. And so in 6 months to 12 months from now, you're going to have people that's already expecting to do a transaction with you again. And so they'll actually reach out to you and be like, hey, you told me in 6 months we could do better, right? Yeah. And so that goes on top of your deals that you're closing for that month. And that's how you get to that next level, right? Yeah, because then you got 3, 6, 12 people in line to do business with you because you set it up that way.
Yeah. You plant that seed like right after your pitch, or do you plant that seed like at closing? Like, hey, you know, in 6 months, we're gonna talk.
Good question. It's always at the pitch because what you're doing is you're telling them that there is a brighter light at the end of the tunnel, right? And so what's hard to digest with a lot of our clients, whether they're paying points or they're paying par or, you know what I mean? Whatever it is, they think that they're going to have it for 30 years. Yes. Get it? So when you educate them that the likelihood of you having this for longer than a year is very low, right? So at the end of a year, your FICO should be this, or your equity should be this, right? It's always something that can change based on today's criteria. And so when you tell them, then it's like, okay, cool, you're going to put that in place. And so when they talk to Better or they talk to Owning, they're like, yeah, but Tony already has a plan in place. You see what I'm saying?
Yeah, like he's already...
Now it's more convenient. It's tailor-made. I'll pay extra for Tony because he knows what's up.